Hello, this is Rich Dad. As we hope for a year-end rally, the repeated declines have left me feeling tired and worn out. However, during times like these, I can't help but think that we're getting closer to a major bull market. In moments like this, it's more helpful to practice looking at the bigger picture rather than focusing on short-term price movements. This mindset can help us get through these tough periods. In today's video, I'll try to provide some guidance on how to do just that. So let's get started. This week, both the Nasdaq and Bitcoin experienced significant drops. It seems that the indicators released this week had a considerable impact. This week was packed with employment-related data, almost like a party focused on job indicators. In my previous video, I also discussed employment quite a bit. Since going over each of these data points in detail would take too much time, I'll provide a brief summary and get straight to the point. To sum up the recent reports, fewer jobs were created than expected, and the unemployment rate is rising. This signals that the economy is not as active as it once was. When the job market weakens, people tend to spend less money, which can affect companies' revenues and have a negative impact on the overall economy. When companies' profits decline, it's natural for stock prices to fall. In particular, the tech-heavy Nasdaq tends to react sensitively to such economic changes. Along with the Nasdaq, Bitcoin is still largely viewed as a risky asset by many investors, which explains why its price has also dropped. The US is currently seeing a rapid increase in credit card delinquency rates. This refers to the percentage of credit card debt that has been overdue for more than 90 days. In a situation where people are struggling to pay their credit card bills, it's unlikely that consumer spending will recover. Moreover, high interest rates are leading to increased delinquency interest, further worsening the situation. If you look at the chart, you'll see that credit card delinquency rates spiked sharply in the early 2000s and during the 2008 global financial crisis, both of which were linked to economic recessions. When a recession hits, unemployment rises and people find it harder to pay off their debts, causing delinquency rates to climb. Additionally, the persistently high interest rates have had a significant impact, which is why, much like during the 2020 COVID-19 period, we may be approaching a time when cutting rates and injecting liquidity to stimulate the economy becomes necessary. According to Bloomberg's data on speculative positions in the US dollar, you can see that after peaking in 2024, net long positions on the dollar have started to decline, indicating expectations of a weaker dollar. The Federal Reserve has consistently raised interest rates to curb inflation. Typically, rate hikes are a factor that strengthens the value of the dollar. However, when investors believe that rates have reached a certain level and expect no further significant hikes, the betting on the dollar tends to decrease. To sum it up, the combination of expectations for the end of interest rate hikes, slowing economic growth, and hopes for a global economic recovery has led to this outcome. As a result, there is potential for increased demand for alternative assets like Bitcoin, or for funds to shift into other foreign currencies or gold. Once interest rate cuts begin in earnest, global liquidity will increase significantly. This chart, represented in green, shows when liquidity was released, and whenever that happened, Bitcoin experienced a major bull market. At present, liquidity is still limited, yet Bitcoin has already reached new highs. On the other hand, the reason we haven't seen an explosive surge yet is because liquidity hasn't been fully unleashed. So what will happen when liquidity truly starts to flow? We could see another massive bull run, like a spark igniting a new rally. However, keep in mind that even if interest rate cuts happen, it takes time for money to flow into the market. So the market might not immediately surge upward right after a rate cut. Please keep this in mind. ZKB, Switzerland's fourth largest bank, has launched its cryptocurrency services at just the right time, ahead of expected interest rate cuts. At first glance, this might seem like just another positive development in the market, but it actually carries much greater significance. Let's take a quick look at the key points from the article. ZKB is providing a B2B solution that allows other Swiss banks to offer cryptocurrency trading and custody services, meaning ZKB's entry into the crypto space is not limited to its own clients. According to a press release, Thurgauer Cantonal Bank, a regional bank in Switzerland, is the first partner bank to adopt this service. In simple terms, ZKB can provide this service not only to its own customers, but also to partner banks. This greatly enhances its scalability. If you look at the last paragraph, it states that ZKB is offering B2B services to over 20 institutions, allowing a significant portion of the Swiss population to participate in the crypto market. This event could be one of the key catalysts in expanding the market share of cryptocurrencies in the future. But if we stop here, it's just, I see moment, right? Now comes the important part, so please pay close attention. If you've watched movies or dramas, you've probably come across mentions of Swiss banks quite often. There's a reason for this. It's due to the strict confidentiality principles that Swiss banks adhere to. Swiss banks do not disclose financial information, including account ownership or transaction details, under any circumstances. There's a reason such laws were established. This is due to the Swiss banking law, established in 1934. The origins of this secrecy can be traced back to the 17th century during the reign of Louis XIV of France. When Louis XIV began persecuting Protestants, many fled to Switzerland, where they became involved in the banking industry. Louis XIV, facing wars and mounting expenses, borrowed money from them and requested that their financial transactions be kept secret. This marked the beginning of Swiss banks' tradition of confidentiality. So this is closely tied to the Swiss banks' long-standing tradition of financial secrecy and privacy protection rooted in their historical background. This aligns perfectly with the core principles of cryptocurrency, such as decentralization, privacy, and data protection. It's one of the key reasons why Switzerland has adopted an open stance towards cryptocurrency and blockchain technology. Switzerland has a highly developed world-class financial system, offering a wide range of top-tier financial services such as wealth management, investment banking, insurance, and private banking. In particular, Switzerland holds a reputation as a global leader in wealth management and private banking. This is why wealthy individuals from around the world trust Switzerland with their assets and choose to deposit their funds there. Switzerland is also an international financial hub, hosting the headquarters of major financial institutions and international organizations. Geneva, for instance, is home to several global organizations such as the World Trade Organization, WTO, and the United Nations, UN. This has solidified Switzerland's crucial position in the global financial market. Switzerland operates a tax system that is favorable to foreign investors, making it a preferred destination for high net worth individuals and multinational corporations. Each canton in Switzerland has different tax rates, and certain regions offer tax benefits to encourage investment. Switzerland has created a highly favorable regulatory environment for cryptocurrency and blockchain technology. The Zug region in particular is known as Crypto Valley and has become a hub where numerous cryptocurrency and blockchain companies are concentrated. Even before ZKB, Switzerland had already been a pioneer in operating cryptocurrency-focused banks alongside traditional financial institutions. Sygnum and Saba Bank are the world's first digital asset banks officially approved by the Swiss Financial Market Supervisory Authority. These banks provide custody, trading, and asset management services for cryptocurrencies and digital assets. They offer services not only for cryptocurrencies like Bitcoin and Ethereum, but also for derivatives, staking services, and tokenized asset management. Their services are available to both individual and institutional investors, expanding their reach across the market. Therefore, the launch of ZKB's cryptocurrency services could serve as a gateway, allowing more individual and institutional investors to enter this market. This could significantly widen the entry point, leading to increased liquidity flowing into the market, making it a crucial development for the crypto space. Additionally, Russia has passed a law allowing Bitcoin and cryptocurrencies to be used in international trade. The reason for this law's passage is that Russia has faced severe sanctions from the West following the Russia-Ukraine war, making international trade difficult. Russia was excluded from the SWIFT payment network, effectively isolating it from the global financial system. As a result, this has caused significant disruptions to Russia's international trade. To facilitate international trade, Russia had no choice but to seek alternative payment methods like cryptocurrencies. Before the Russia-Ukraine war, Russia's international trade volume was around $1 trillion. However, due to the declining trust in the ruble on the global stage, it has decreased to about $850 billion. If this trade volume starts being replaced by Bitcoin or other cryptocurrencies for payments, it would create significant demand in the crypto market, potentially acting as an upward pressure on prices. Now let's take a look at the on-chain data and discuss it. The market is currently in a state of fear. Investor sentiment is similar to when Bitcoin was hovering around $20,000. After nearly 6 months of moving sideways within a large range, it's no surprise that investors are feeling frustrated. As I've mentioned multiple times in previous videos, this could actually be a buying opportunity, especially post Bitcoin halving. If we look at past examples, the times when investor fear was at its peak often turned out to be great buying opportunities. It's only a matter of time before these price levels are overcome and new highs are made. Most investors' accounts are probably in the red right now, with losses ranging from 10-20%, and in some cases, depending on the portfolio, as much as 60-70%. When your account is in such a state, it's natural to have negative thoughts. I've been there myself in the past. However, it's those negative thoughts and emotions that often lead to mistakes at critical moments. Every time it looks like the market is about to rise, it drops again, and this cycle repeats, leaving investors wishing they could just break even. As you endure this tough period and hope for a bull market, the moment your portfolio reaches break even, the fear of another drop takes over, leading you to sell at a reasonable point. However, after selling, you realize too late that the point where you sold was actually the beginning of the next bull market, as prices continue to rise significantly afterward. Then, if you enter the market late again, it often leads to losses, creating a vicious cycle. That's why it's crucial to overcome the psychological impact of a negative account balance. Recognizing showing that it's your own mindset you need to conquer is important, and it's worth taking steps to clear these thoughts. Doing so will reduce the chances of making mistakes when it truly matters. Now, let me show you a few pieces of data that might help with your mindset, and we'll wrap up from there. This indicator measures whether long-term Bitcoin holders are selling their assets or not. The black line represents Bitcoin's price, while the green line tracks the movement of long-held Bitcoins. The longer a Bitcoin has been held, the greater its influence on this indicator, making it useful for determining if long-term holders are selling. Previously, when Bitcoin experienced a major price surge, the green line also rose, forming a double top before declining. Although Bitcoin's price has been falling, long-term holders have not been selling. This is a positive sign for the market. Looking at Bitcoin's active addresses, we can see that the current level is similar to when Bitcoin hit $3,200. Active addresses refer to wallets where Bitcoin transactions, buying, selling, and movement are actively taking place. During major bull markets, the number of active Bitcoin addresses increases significantly, as seen during the 2017 and 2020 bull runs. Before those bull markets, however, this figure was lower. Currently, the active address count is in a range similar to the periods right before major price increases. While we may not see a sudden surge in the next 1-2 weeks, it suggests that we are in the early stages of a path leading to a major rally, even if the price experiences further downward pressure in the short term. Currently, Bitcoin has recorded more trading hours than the stock market since 1971, which is remarkable considering Bitcoin has only been around for 15 years. This highlights the immense global interest in Bitcoin among investors. It also demonstrates the growth potential of digital assets. In the long run, Bitcoin has the potential to establish itself as a decentralized digital asset, distinct from the traditional stock market, and as a flexible and independent investment vehicle. Naturally, this growing demand could lead to a significant increase in Bitcoin's price. Here's a summary of today's video. This week's employment data pointed to a slowdown in the US economy and a reduction in consumer spending, leading to declines in the Nasdaq and Bitcoin. However, I believe the influx of global liquidity will eventually drive a significant market rally. The launch of cryptocurrency services by the Swiss Cantonal Bank and Russia's decision to allow cryptocurrencies for international trade could pave the way for increased demand in the market. According to on-chain data, long-term holders are not selling, and the number of active addresses is similar to levels seen just before major bull markets, indicating a high likelihood of another significant rally ahead. The great investor Peter Lynch once said, "The success of an investment depends on how long you can ignore the pessimism of the world." This perfectly fits the current market situation. Don't let yourself be swayed by the pessimism of those around you or the various naysayers in crypto communities. Stay strong and persevere. If you found today's video helpful, please like and subscribe. Thank you.